Welcome to the last session of the day before Mo. This is investment and trading strategies in Bitcoin and cryptocurrencies. This is actually a talk that I give at most of the conferences because most of you guys know me as like a trader and traders trade. So I like to talk about trading, I like to talk about making money because at the end of the day, that's why we're all here, is to make money. Changing the world is a great thing, but let's make money first. So, investment in trading strategies in Bitcoin and cryptocurrencies. Let's get started. What are we going to talk about today? Raise your hands. How many of you here actually trade cryptocurrencies, hold Bitcoin? Raise your hands. Okay, great. How many of you here care about the price of Bitcoin? How many of you here don't care about the price of Bitcoin? Okay, there's two types of people in this world. People who care about the price of Bitcoin and people who lie about it. So you guys are liars. All right, you want to know why? Because if Bitcoin was at $1 right now, conference wouldn't be here, people wouldn't be driving Lambos, and we would all be working on something else. So what I want to talk about today is, for a lot of you, some of this might be familiar, but I like to give the audience something that they can always take with them. So I like to provide a little bit of a trading 101. And if you follow a lot of the talks that I've given, some of the stuff overlaps. A lot of the stuff changes, but some of the stuff stays the same. And in this industry, the only thing that is constant is change. So for those of you that know what I'm talking about, is the price and the volatility are very, very important things to understand in the cryptocurrency space, because the volatility and the price of Bitcoin specifically is a barometer of the health of the ecosystem. And I'm actually going to talk a little bit more about also trading in Satoshis as well, because what you're starting to see now is, before everything was just priced in Bitcoin, US dollar, but now we're starting to see a lot more of these alternate currencies where the base trading pair is based in Bitcoin. So it's important to start thinking in Bitcoin terms. So you're going to hear me talk about Satoshis a lot later in this talk. So let's get started. So we're going to talk about Trading 101, some fundamental analysis. We're going to talk about history, a little bit about us towards the end, and we have time for questions, a Q&A. And the nice thing is I'm always the last speaker of the day for two reasons. One is Mo can't throw me off the stage because I have as much time as I need, so I can answer your questions. And two, because I like to close, because that's what I am, I'm a closer. Just remember, coffee's for closers, all right? Okay, so Trading 101, what are we going to go over? Market update. Where's the price going to be? We're going to talk about ways to trade Bitcoin and cryptocurrencies, a little bit about terminology, trader psychology, crypto liquidity, ICOs, and trading opportunities. So whenever I give a talk, I love giving value to the audience. So my goal here is today that you can take the stuff from this deck. I'm here to entertain you, but I'm here to also educate you so that you can make money from this. And if you're just new getting started, this presentation is actually perfect for what you guys are looking at getting into. So first off, market update. Where are we at? So I have this thing called the crypto market meter, right? So this is a pretty awesome meme because this is the crypto expectations in December. And when I saw this, it was pretty awesome because in December, everybody's like, I'm getting a Lamborghini, right? And that actually is a Lamborghini Centenario, which is like a $3 million Lambo. So in December, it's like, everybody's gonna get Lambos. First week of January was pretty amazing. We hit an all-time high in January. Bitcoin was at $19,500, $500 from hitting 20,000. Middle of January, I think that's a Ford Focus. So people are like, shit, the expectations are actually Ford Focus. And then in February, with the correction, I think, what is that? That's like a play school. That's not even a Lamborghini toy, right? So this is kind of how we rank the health of the industry is by Lambos. So hopefully March, February, April, you're gonna start, next time I give this talk, you're gonna see different cars on the chart. So anyways, just kind of some fun. I love crypto too, by the way, all the memes that actually exist. But let's take a look at some history, some charts, market update. What's interesting is, for those of you that have been in crypto for a very, very long time, all of you will remember what the first big crypto winter is. That's from 2013 to 2015. All of us that sat through that, it was a very, very painful experience. And I like to share this experience as a trader, because the people that really believed in the viability of Bitcoin, blockchain, we stuck around and we've been rewarded for it. I mean, those of us that really, really stuck around, that really, really believed in it, and aren't the people that just got in recently. So I think what you're starting to see here right now too is the market is very, very unforgiving. Bitcoin cryptocurrency price it doesn't care if you're happy, you're sad, if you're having a bad day, if your cat died, if you're getting married happy, the market just does not care. And it's the only market in the world where it trades 24 hours a day, 7 days a week. You don't get a day off, you don't get a break. If you're sleeping and the price goes up or corrects, it's too bad. So it's a double-edged sword. I love and I thrive on this. This is why we've built one of the most successful 24/7 trading desks. You can call us anytime and we can actually book a trade for you. Like the EOS airdrop, we're one of the guys that did a lot of the buys for the EOS airdrop, which I'll talk a little bit about later as well. And this is why it's important to have a team and a system that's actually designed for what the cryptocurrency market's actually like. So I'll give you an example. The way the traditional financial systems work is very, very different than crypto. So for those and I'm just gonna bring this point up because for those of you that are OTC traders here, like myself, we've been in this game for a very, very long time, all right? Anybody here who says they have 10,000, 50,000, 700,000 Bitcoins, please leave right now because the way OTC actually works is, in crypto, is completely different. People that are gonna ask you for proof of funds, you know what I say to them? Look in the parking lot, there's my proof of funds. All right? Because the reality is, nobody is going to expose how much money they actually have in this space because it's a massive security risk. This is actually something that's very, very important for traders and people that are in financial getting into this space because the way that you think the system actually works, it's contrary to how the traditional financial system works. And even the volatility here, it's very, very important to see why this volatility is important, especially if you're a trader, because right now a lot of people that have gotten in December recently, they're feeling the pain. And we've had an 87% retracement, and I think the second largest retracement right now is 70%. So we think that right now it didn't break 6,500, so we're pretty much bounced for a move back up. There's so much selling pressure at 6,500. So last week I said if it doesn't break 6,500, you're going to see a very, very violent recovery bounce back up to probably around 10,000, which is kind of where things are starting to look right now. So that being said, where's the price going to be? If you believe in cryptocurrency, longer term, it's still going to continue to go up. And the reason why Bitcoin, I always refer back to Bitcoin, is because Bitcoin is the barometer. It's 45% of the market that's actually traded in terms of cryptocurrencies. Total market cap is still about $300 billion right now, but it is going to outperform every single asset, which is why traditional family offices, institutions are starting to look at getting into this space. But to get into this space, this is what we're here to do. We're here to help build the bridges, but it's also to educate people on how the system actually works. So where's the price going to be? How do we determine this as a fund? And also on the trading side is we use a combination of fundamental analysis, technical analysis, and trend following. So let's talk, for those of you that are new to the space, let's talk about ways that you can actually trade Bitcoin and cryptocurrencies. We're going to talk about different money-making methods, how you can actually make money in this space. We're going to talk about trading on exchange, over the counter. Over the counter, we're going to talk a little bit about arbitrage. Now, arbitrage in crypto is very, very unique because it always exists, and we're going to talk about market making. So what are the different ways that you can actually make money in cryptocurrency? Well, the majority of the market goes long, so you buy low and you sell high. And then probably a few years ago, you can also short Bitcoin, which is ill-advised unless you're really, really sure that we're kind of in a bear market because just even the last week, you see the big price move, that was a big short squeeze. So margin trading allows you to short, you can go to Bitfinex, GDAX. Also, if you want to do Bitcoin denominated futures trading, you can actually use BitX. And then options, you use LedgerX, which are CFTC denominated options. And then which exchanges? Now these are the exchanges that we recommend if you're new. Trade on these exchanges if you're kind of getting used to the space, just because these ones are the ones that have been around the longest. We can reference the deck later. And then over the counter, so over the counter is one of the, any kind of transaction that's considered over the counter is, let's just say I have someone in the audience that wants to buy 10 Bitcoin and I have some cash or I have some money, I send them the money to send me the Bitcoin. That's an OTC transaction. So most of the transactions that actually happen in the cryptocurrency space, specifically with Bitcoin, is actually happening over the counter. It's not really happening necessarily on exchange. So let's talk about arbitrage. What's arbitrage? Definition of arbitrage is it's the simultaneous buying and selling of the same commodity or currency in one market and selling it in another. So if I see a price inefficiency on Bitstamp and I can buy on Bitstamp and sell on GDAX and I can execute it right away. A lot of people make money doing this. They write robots to actually do this. So you do this enough times in a day, you can actually make a lot of money. And what people don't realize is that Bitcoin will continue to always have some type of arbitrage just because we're still connected to the old world of fiat. So until banking systems actually, unless you can do SWIFT 24 hours a day, 7 days a week, which we don't really see happening anytime soon, you're always going to have arbitrage. So market making, let's talk about market making. What is market making? Anytime you post a limit order for buying and selling on any exchange, that's considered market making. There's different types of market making out there. There's electronic market making, which is where you have a piece of software that will automatically do buy and sell based off of statistical arbitrage or statistical analysis. And typically how you make money from algo trading is you profit from spread. Great, so let's move on to terminology. Everybody still following me? Not falling asleep yet? Good. So terminology, when you buy cryptocurrency, you either are doing a bid, offer, buy, or going long. And when you're selling, it's ask, sell, or short. So one thing I always like to touch on too is trader psychology. It's very, very important to be mentally tough. And the only way to become mentally tough in trading is to keep doing it over and over and over again. So I'm guilty of this too. I've lost money trading. But every time I lose, I learn something from it because you always learn more from your losses than your gains. If you were right 100% of the time, everybody would be rich, everybody would be making a ton of money. But the reality is, you only become better at something if you're consistent. So I've been trading Bitcoin every single day since 2013, probably in June. The one thing I can tell you is that as I've gone through all the dips, all the rises, I've been able to start to identify patterns on kind of how the market actually reacts and how to actually profit from them. So I'm going to share a lot of these with you today. So first is cut losses quickly, let your profits run. Very, very important, easier said than done. How many times have you sold at the bottom and bought at the very, very top? Everybody's done it. Those are kind of the emotions that all of us as humans feel. So for example, when you feel fear, that's when you should be buying. So if that's the case, don't buy so much that you become even more scared, but identify when you feel scared, because that's actually a signal. And then when you feel euphoria, try selling a little bit, because that's actually what we do. Like even the last couple of weeks, I'm gonna tell you, it was very, very hard. Like we're like, okay, this thing, if it breaks 6,500, it's gonna go to 5,000, it's gonna keep going lower. That's your gut instinct telling you, but try to react on it. You can react on that. Sometimes those are like some of your biggest profits. Always have an exit strategy, always take profits, and always be trading. So you don't need to trade 8 to 10 hours a day, but understand that in order for you to become proficient at something, you need to trade 10,000 hours or train, do something for at least 10,000 hours to become really good at it. So 10,000 hours, 8 hours a day for 4 years, that's how long it takes. To become a master at something, 40,000 hours. And trade, but don't trade, because traders trade. If you overtrade, if you're in a position and if you lost, don't try to make it back right away because you're just going to lose more money. Patience and small trades add up to big trades. Manage your fear, hodl a little bit, because one of the unique things about the cryptocurrency space, as we've seen historically, I did an experiment a few years ago where I put aside 1 Bitcoin every day for a year, and that outperformed a lot of the ins and outs that I was actually doing. So put away a little bit of Bitcoin, a little bit of cryptocurrency every single day, because that's how you average in over a period of time. Think about it, 365 days a year, even if you put 1 Bitcoin away today, that would have been close to about probably $3.5–4 million. And trade with only what you can afford to lose. Start small. I started with $500 US. But I did it like 1 trade at a time. Important thing about trading psychology too. Bulls make money, bears make money, pigs get slaughtered. You can make money when the market goes up and when the market goes down, but if you get greedy, you'll always lose. So let's talk a little bit about crypto liquidity and ICOs, and I'm just gonna ignore that flashing thing. Give me an extra 5 minutes. Okay, liquidity is key. The ability to get in and out. For a lot of people that are investing in ICOs, and why I put this slide in is, you have to understand that whenever you buy into an ICO, until it lists on an exchange, you're basically putting your money into something that may or may not ever, you may never be able to get out of it. So this is why it's extremely important. So let's talk about liquidity. So liquid pairs. Liquidity is king. So Bitcoin, Bitcoin Cash, Ripple, Ethereum, Litecoin, EOS, and Cardano. These are what I call the most liquid trading pairs on the market. And because these are the most liquid trading pairs, if liquidity is an important issue for you, don't invest in ICOs. Trade only these cryptocurrencies. And I always recommend people trade Bitcoin first because Bitcoin is the least volatile out of all of them. I know that sounds crazy. ICOs and tokens. Liquidity is an issue, like I was just talking about. Lockups and exchange listing is critical. When you invest in an ICO, you need to understand, okay, what is their plan when they ICO so collecting the money and investing in it is great. When are we going to be able to get the money out? So if this ICO isn't planning on listing on an exchange anytime soon, and it's not a good ICO, you're going to lose your money. Just understand that. This is why I don't invest in ICOs personally, but I have a team that works with us that looks at every ICO individually, and based off of the team, based on the team's track record, it's almost like venture investing plus trading, and that's what I love about this space is, we've got venture capitalists, hedge fund guys, all working together to really kind of drive this industry forward. Most of the tokens that you're seeing right now are ERC20 tokens, and with disclosure, these are the tokens that we hold and we trade. We love Cardano for one reason, just because we see the vision. It's one of the guys from Ethereum that started EOS. I mean, EOS is the next Ethereum, right? And Encash, Polymath, and Flashcoin. These are three notable mentions. Encash, the nucleus fission guys, disclaimer. JCK, one of our managing directors, has invested in this. But personally, for myself, I don't invest in ICOs. But what I loved about Encash is on the first day it traded, $200 million was exchanged on one exchange, and continuously every day we can get in and out of large positions. So we're actually pretty excited about Encash just because there's the liquidity there from an ICO, and also they're building a real product. If you ever see that movie Minority Report, that's kind of how their product works. But when you walk into a retail store, definitely check it out. And then Polymath, tokenization of securities and assets. This is why we're betting big on this one before, because we believe that all securities, like oil, commodities, whatever, in the next 12 to 24 months, they are going to get tokenized and traded on exchanges. And then Flashcoin, this was one of the pet projects that we've been kind of looking at as well. Liquidity is not there. It's been around for 2 years, but based off of the Litecoin source code and blockchain, fast transaction times and low rate, it could be a good replacement or an additional to electronic cash. This is why we look at Flashcoin. Trading opportunities. Last time I showed you trading logs, now I want to show you guys trading opportunities. Why it's important to have a little bit more of a longer term view instead of just day trading, for example. So the EOS airdrop that happened this week, for those of you that knew about it, you made probably 30 to 40% plus in June. Hold EOS till June, because the EOS ICO is brilliant. It's a 365-day ICO. Most people don't know they probably raised close to $5 billion in Ethereum. And on top of this, buying EOS right now, you will get a bunch of free tokens. So there's EOS DAC, I think, just buying in just before the airdrop actually happened on the weekend caused the price to move up over 30%. So on top of that, you're making 30% and you're getting these free tokens. So these are the trading opportunities that we look for. And then obviously, Encash, the price action is the most important thing for me. When I look at price action and I look at the order book, Encash is one of the only cryptos right now that consistently on a single day trades around 5,000 Bitcoin on one exchange. So like I said, liquidity with volatility, that's what I love as a trader, because traders trade. So we'll go a little bit about fundamental analysis real quick. So what's fundamental analysis? Fundamental analysis in cryptocurrency is primarily like news analysis and macro events. Some of the resources I definitely recommend looking at are CoinDesk, Twitter, Google News, Bloomberg, CNBC, Wall Street Journal, and actually Brad's got an awesome show called Crypto Trader that runs on CNBC Africa. I think he does it like once a week. Excellent show. Talks about all the different ICOs and everything. Oh, there's Ryan right there. He just raised his hand right there. So promoting a show. I don't get paid for it, but. Okay, and then Bitcoin Talk and Reddit, if you enjoy trolling, which is kind of like the fun part of the crypto, is everybody's talking about everything else on these forums. And then fundamental analysis is also research driven. But what's important about fundamental analysis? So you gotta understand that because there's more players coming into the space, there's a lot of fear, uncertainty, and doubt. How many of you here have heard that Bitcoin has died, or Bitcoin is dead, and governments are banning Bitcoin? So I'm gonna give you a huge tip right now. Anytime the government bans crypto, that's when you should buy. Because that's somebody creating fear news that, you know, and it causes the price to dip. So it's every single time these drops happen, they drop around 10, 15 to 20%. And these are one of the chart patterns I'm gonna teach you guys. Set limit orders in, you can make 5, 10% very, very quickly. Bitcoin has crashed at least 30%. 6 times in 2017. So this is what I'm saying. Understand that this thing can move 10 to 20% in one day. My traders will tell you, when I trade Bitcoin, when I see a 10% drop, my eyes get all like bigger and like all starry-eyed, because I know that if it drops 10%, it can drop another 20% in like the next hour. But then what happens is, you have to understand, when there's that much selling, it has to bounce back up. So it's not like traditional assets and commodities, but understand that these patterns exist. And if you can identify these patterns, that's when you should trade them. So what's technical analysis? Study of charts and patterns to determine where the price may go. Remember that past performance isn't indicative of future returns, but in the trader's case, past performance gives you a better indicator of how something may perform. And a self-fulfilling prophecy is actually very, very important, because all of us traders actually use it. So I'll give you an example. If we see that there's a huge opportunity where the price is going to move in one direction, we will scale into that position. Other traders will see that the volume is actually increased. So when the volume increases, then guess what? Other traders see it, and that's actually what causes the price to actually move up. It was kind of cool because we did that at 7,000. We saw that Bitcoin was at 69.90, so we're like, okay, let's just buy because we think it's going to break out. And then what does it do? It actually breaks out. So. Chart patterns. Remember these. The parabolic and the dead cat bounce are like the two most important chart patterns you need to know about cryptocurrencies. Cryptocurrencies perform like penny stocks. So parabolic, January's move, 19,500, back down to 66.50, back up again. It is a parabolic price move. So anytime you see the price spike up, understand that when it goes up 50%, it could correct 30%. And the one that everybody knows that I always talk about is the dead cat bounce. I don't know why they call it the dead cat bounce. I think the trading terminology came from, like, if you threw a cat off of a building, I don't know why you do that, and it actually hit the ground, it would actually bounce. So the trading pattern actually is that if you have something that drops 20%, you can see it bounce back up 20%. And right now the bounce that you actually see, that big move up, that's actually a longer term dead cat bounce. But the best dead cat bounces in the trades are the ones that happen where it's like about 1 or 2 hour time frames. So that's literally it. So let's talk a little bit of history about us, past, present, and future. So look, we've been around for a while. Success is a journey. For us, we think that it's great that, especially here in Dubai, I just moved to Abu Dhabi. We love Dubai, and the UAE is actually probably one of the most progressive places, and we're very excited to be hosting this event along as a sponsor with Mo. And actually I gotta thank Mo, because the first blockchain conference that we did here was at the Burj Al Arab back in 2016. And it's amazing to see how many more people actually come to the conferences now. And I think you're gonna see a lot of amazing things happen here in the UAE. It's just such an amazing place. Started this in 2013. This is my first Bitcoin transaction circa 2013 in June. So the present, look, 2018, what do we know? World's waking up to crypto and blockchain. Sovereign wealth funds, countries are starting to buy Bitcoin and other cryptos as an actual hedge. Pension funds are talking about it. Everybody now needs to have some sort of exposure. That's what we're here to do, is to help get exposure. We're here to help build the bridge between the traditional systems and the newer crypto systems. So believe in the future, we'll do it together. Thank you for being here. What's more important, valuable for mining cryptocurrency is time. So thank you for investing the time to come up here. You guys should all be proud of yourselves for taking a look at the space. And who are we? Miner Financial. We're one of the older hedge funds in the space. Have premier OTC trading desk. I'm here with my whole team. If you guys have any questions about crypto or even banking or whatever, talk to my team. We're based out of Canada, Singapore, and the UAE. Minimum trade size is $500,000 US per trade. That's kind of what we do, is larger block size trades. And if you have any questions, feel free to email us, info@binaryfin.com, follow me on Twitter. And do I have any time for Q&A or no? Okay, 3 questions. All right, so is there a mic? No, there's one question right there. Yes, you sir. Okay, yeah, give him a mic too.
Okay, my name is Chris Annie.
Hi, how are you?
Abundance, Lagos, Nigeria. Concerning your trade platform, do you just sign a kind of contract monthly, yearly for your investors? For instance, like the last one, I'm seeing, okay, 500K per trade size.
Yeah.
So how does that one operate?
So the question is, how do we do contracts?
Yes, because I know hedge funds that do, okay, 6 months or 1 year or so. So how do you do your contracts?
So the way we actually do contracts, I think you're talking about futures and derivatives. We don't really speculate based off of future price. When we say our minimum trade size is 500,000, if somebody wants to buy $1 million worth of Bitcoin, we either will buy $1 million worth of Bitcoin for them or from them and send them money. That's actually what we do.
Okay.
Yeah. Okay, next question. Ryan, you have a question? Of course you have a question. You always have a question. There you go.
I don't have a question. I just want to say that I've been working with Harry. I'm Ran, Crypto Man Ran.
Crypto Man Ran, ladies and gentlemen. Give it up for him. He's got the best show, 77,000 followers on Twitter. Ran, you're amazing.
So yeah, I've been working with Harry for the last couple of years. I'm one of the early investors in his fund. And,
he is.
And the returns in his fund have been over 10x in less than 6 months. And I can attest to that. So here's testimony to someone who actually works with the man.
Thanks, Ran. I wasn't expecting that. We don't usually discuss the returns, but thanks, Ran. That wasn't really a. Do you have an actual question now, or? Okay. Anyone else with a question or no? Okay, last question right there.
My question would be, what would you consider the benchmark in this space? Like, is Bitcoin the benchmark? Is it basket of the whatever top 10 crypto the benchmark? If you want to like rate hedge funds how they perform against the alpha, what would be the benchmark in this space?
It's funny that, so the question is, how do you benchmark if you're raising a hedge fund and whatnot? And maybe this is just me, I benchmark and say, we just beat inflation. No, I'm kidding. The reality is, you can benchmark against Bitcoin, but if you're raising a fund to benchmark against something, it just means that you as a fund manager, whatever, can't really provide the kind of value that needs to be done because Bitcoin is just one cryptocurrency. So I think you can't even say really a basket of cryptocurrencies per se. I think it really kind of depends on the historical and the track record because the space is just so new. It really depends. Like for us, we don't benchmark really against anything because the reality is we take a VC style type approach to investing in ICOs and trade, but we also have a trading performance tracker, so it's kind of like a hybrid. So there's so unless you're like a long only fund, in which case you're really benchmarking against Bitcoin, then you have to outperform Bitcoin. So does that answer your question? Yeah.
It's a little bit of no answer.
Yeah, I mean, I think it really depends on the kind of fund that you are. So if you're a long only fund, then yeah, you would benchmark against Bitcoin, but if you're like an EOS fund, then you would probably try to outperform EOS, right? But that's it. Thank you very much.